Hello everybody. So today's video is a subscriber request from my highest tier on Patreon, and I thank the person supporting me who will recognize themselves. This stock today is Grab Holdings. So what is Grab? Grab is a super app. It's an Uber style super app. It's got delivery of groceries, delivery of food from restaurants, and transportation, and a little bit of fintech. I'll get into that. And this super app for delivery, this Uber style super app, operates in Southeast Asia, and that would be countries like Indonesia, Malaysia, Singapore, Thailand, Vietnam, Philippines, and Cambodia. This is a region that is very prone to getting everything delivered, just like in China. If you know anything about China, delivery is the way to go in China. Everybody gets everything delivered over there. And, that was Didi, and the Didi app, also popular in certain places in Latin America, for example. Anyways, this app is going after Southeast Asia, which is a major market in the region after China. And of course, the rest of the world is also very prone to getting everything delivered. That's what we're going to talk about. Also, comparing Grab and the valuation compared to some of the other stocks. Anyways, the year-over-year growth is 17% for this company in dollars, right? 20% constant currency. You have these currency movements when you're dealing with all of these regions. They also ship more merchandise, and this is a company that is adjusted EBITDA profitable, which is what I care about on my channel. I don't want my companies to lose money. I want my companies to have revenue growth kicking in, and also profitable revenue growth, i.e. the adjusted EBITDA has to be positive. So let's look at the business. Let's do a deep dive into each segment. The biggest segment is deliveries, mostly for food, but also for grocery stores. Actually, grocery deliveries is their fastest growth segment. But you can see their merchandise was almost $3 billion this quarter worth of merchandise moved around. That's 53% of the revenue is for deliveries. That would be the DoorDash equivalent of this business. And then mobility is 38% of business. That would be the authentic original Uber and the Lyft equivalent of a business. Mobility, right? Driving around. That's just same as Uber here. And then 9% for financial services. Let's hold that thought for a second. Financial services is interesting. They both have a transaction division and a loan division. So you'll see that in a second. They actually lend to people for their cars. They lend so that people can acquire their cars. Let's talk about the valuation for Grab. So as far as my spreadsheet goes, it is the only stock, and I've put all comparable companies. So Uber, Lyft, DoorDash, Didi, the Chinese company, and Grab. So these are all in the same sector. They are these delivery apps, right? The only one that achieves a rule of 40 is Grab. So kudos. Like if rule of 40 is a strict criteria for you and you don't want to invest in a company that doesn't achieve rule of 40, well, the only option in that sector is Grab. They achieve rule of 40. Now, as far as the valuation goes, enterprise value over gross profit over revenue growth, how much am I paying for that future growth? It's the third cheapest out of the five, so it's right about at the middle. Not expensive, not the cheapest either. But they have a leading position in their region in Southeast Asia. If you look at the absolute leader in the sector, of course, it's Uber. Uber, in my view, right there is I mean, I know there's going to be disagreements about that, but as a big Tesla investor, I happen to believe Uber is overvalued. The present value of future cash flows for Uber, a big portion of that transportation portion, could be taken away by the Tesla black hole. So I think the market is not looking forward and long enough, and I think Grab is actually slightly more protected. I'll get to that in a second. On a growth basis, so like I said, it's cheaper than Uber, cheaper than DoorDash, but it's more expensive than Didi, and that's expensive. That's understandable. That's because Didi has the China stock penalty, right, as we call it. And then Lyft is definitely player number 2 in the USA, and it's also understandable why they would have a lower valuation. On a price to sales basis, however, compared to the rest of the industry, it is expensive. It's the second most expensive after DoorDash. DoorDash is the most expensive in their highest rule of 40, so good for them. So the valuation, hopefully that gives you an idea about where they stand. Now, let us talk about the tailwinds, so the industry. So the conference call, one of the notes about the addressable market of this company is they were mentioning that over the next 5 years, actually, Southeast Asia, you may see double-digit compound annual growth rates for 5 years, for the next 5 years. So this is a company that is growing fast in a sector that is poised to keep growing, and so that's the tailwind number one. Southeast Asia is growing faster and has faster growth than the USA, and in the USA, this sector is still growing very fast but more mature. Tailwind number two is they have a fintech. So the payment division, I think this will scare nobody. It's your standard transaction fee business. They have a little bit of a pay later business, but not that big of a deal. A little bit of an insurance for 30 cents per ride. That's their Singapore division there. Anyways, this is not something that I think is scary to anybody. So it's a classic take rate business. The reason why I use the word scary or worry is the loans to drivers and loans to store. They have started a loan business, and of course, when you lend money, you can grow as fast as people will want to borrow the money, and as fast as you want to take on risk, of course, but that has a little risk because you could have non-performing loans. So you can see right now their bank deposits is more than $1 billion, but half of that they have loaned in the form of loans to drivers and stores. Nice way for them to make more money, to earn revenue in the form of interest, which is going to turn mostly into income, but nonetheless, it could be risky, and the market. I obviously talk about this because of StoneCo, right? I've had issues with StoneCo and the market being scared about the loan business. For now, this is not a problem. It's a tiny portion of your business, only 9% of the business. Tailwind number 3. I think when it comes to Grab, I think there is a lower threat of Tesla and self-driving for them because they are not operating in Tesla's main focal market, which is Europe, USA, and China to a lesser extent. Tesla Cybercab will be coming to the USA first and probably Europe next and China soon. I think Southeast Asia will be later on in the Tesla Cybercab story. Therefore, that threat is not materializing soon for Grab. I think eventually they will have that threat, but not as soon as for Uber. And so they are greater distance away from that threat. And for that reason, it's good. So to sum up a few tailwinds, right? Southeast Asia, the business is growing faster over there than in the USA. Fintech, many people are going to love it. Some people are going to be worried about the loans. I think right now fintech is small, so nobody's really worried. And there's a lower Tesla threat. Now, moving on to the Delution. When it comes to Delution, it's been mostly flattish over the past few quarters. Of course, when they went public, you had the major Delution. But the Delution is not a point for concern as far as my style of investing for at least the past 3 years, let's call it. The Delution gets a green flag for me. Now, as far as the competition, this company is not competition free, and it's worth mentioning that actually Sea Limited, another stock that I cover and that I own, is a competitor against them. They have Shopee Food, and Shopee Food does delivery of food in Southeast Asia. That's one of the competitors. They also have an Eastern European rideshare company, Bolt. Bolt is over there, as well as Gojek, and there's a few local players in each of the countries. So they do have some competition. They do appear, as far as I'm concerned, they do appear to be the leader in those regions of the world, but the competition is there. This is not a competition-free business. But then again, Uber too is not a competition-free business in the US. And when it comes to the total addressable market, I think this is where we need to start asking questions such as, so we have a grocery delivery. So grocery delivery, that's going to be probably a bigger market in the future. A lot more people are going to get their groceries delivered. It's a more efficient way to do business. We know that Coupang, for example, in South Korea is big on grocery delivery. I just mentioned Southeast Asia, Sea Limited, right? Sea Limited is big in grocery delivery. Uh, I think that sector in the US, there was a lot of hype around Instacart, kind of faded down, and now it's coming back. So we're emerging out of the valley of despair for grocery delivery, and I think this is going to be a major part of that business in the future. Now let's talk about restaurant deliveries. So restaurant deliveries, they're a major trend worldwide. Gen Z doesn't care to cook, doesn't. I mean, they may, but most of the time, Gen Z doesn't cook at least as much as older generations. As a result of that, the demand for restaurants should go through the roof in the coming years as the culture gets better and better. The entertainment gets better and better. And so when at-home entertainment is really good, what happens is that folks want to stay indoors, and when they want to stay indoors, they want to order restaurant deliveries and food deliveries that they don't have to cook, and they can just pay for it. Some people also argue that food deliveries is actually cheaper at home. Food deliveries at home is actually cheaper than cooking at home, and so that's an argument that I'm not going to get into. But if you're a single person, if you're just cooking for yourself, it may be tough to get all the ingredients. So some people argue it's actually cheaper to cook at home, so cheaper to do restaurant deliveries. So because of that, some people might be more inclined to getting restaurants delivered. And then you have the major trend of ghost kitchens. And ghost kitchens, they are these virtual restaurants, these restaurants that only exist on the app. They don't exist in the real world, only on the app. They're typically operated out of large warehouses, for example. And this is a major trend in the delivery sector. A lot of restaurants will not only deliver online, but a lot of ghost kitchens will create these virtual restaurants and push sales and generate a lot of sales. So this is a major growth business in the restaurant in the restaurant industry, major growth business for a Grab. Lastly, car ownership, and this is the bigger chunk of the question: is is this going to grow or not? Well, as far as transportation goes, as far as getting a Uber, getting a Lyft, or getting a Grab, right, in Southeast Asia, one of the questions we have to answer is: are we going to own cars in the future? Well, Elon Musk obviously doesn't think so. He thinks cars are going to be something that most people are going to be renting or using on a trip-by-trip basis, and you're going to be giving the car back. People owning a car may become more of a luxury in the future. And of course, cars are depreciating assets. They spend most of the time sitting on the driveway, doing nothing. You probably know that whole argument. And so that's one of the drivers as to why Grab would have a major total addressable market, because people are more likely to use on-demand transportation. In large cities, on-demand transportation is also much more relevant. A lot of people in the country, it's different, right? In the country, having a car is different because you may have to wait for an hour to get a taxi or Uber. But in a big city, I think you can make a case that just getting around with on-demand transportation is a better way to do it. And also you have the trend of Gen Z. A lot of Gen Z doesn't always learn to drive anymore. This is not as necessary as it once was, maybe 20 years ago. So you have a lot of younger people who simply never learn how to drive, and they just live on transportation, third party. They just live on these apps. And lastly, I could make a point that a car payment, as we call it, or putting $40,000 up front in a car, plus insurance payments, if you calculate it in most times, the cost of the two is actually more expensive than 2 trips a day with Uber and Lyft. I did the calculation myself in my own situation, and it seems like really the prices are getting quite compelling, actually. When it's between $8 and $15 per trip, $30 a day for 2 trips, you're at $900 a month. Some people, if you buy a newer car, sometimes you're gonna have $1,200 a month of a car payment or whatever. We've all seen probably these YouTube videos about the insanity that insurance payment and car payment costs. And Of course, that's if you need transportation. But if you start everything delivered, if you start getting your groceries delivered, if you start getting your restaurant, your food, your restaurant deliveries, your meals delivered, you get into a situation where oftentimes the restaurant delivery or the grocery delivery is sponsored by the grocery store or is sponsored by the restaurant or is essentially free. So if the cost of transportation of the food is very marginal or essentially free because you have a subscription, so for example, Uber One, right? In the US, if you have Uber One, you get free deliveries on participating restaurants, which is essentially all of the restaurants on there. So if you get free deliveries all of a sudden, what we may think as needing a car, needing to drive to the restaurant or a grocery store, well, you may not need to drive to the grocery store anymore. You may not need to drive to a restaurant anymore because you're getting everything delivered at home, right? And you have also the issue in big cities, the issue of parking. Parking is ever more expensive, and the issue of, I don't know if it's the case in Southeast Asia, but in the US, every single restaurant wants you to drop $10 for a valet, and it's becoming very annoying. You know, it's like the cost of Uber to get to the restaurant is sometimes cheaper than the cost of a valet. So I think it's becoming harder and harder to justify owning a car in a lot of situations, especially for those living in the big cities. And I think that trend is only going to continue, making transportation, on-demand transportation, the choice of most people. One last thing I could have put that I'll throw in there right now is the safety issue with the bus and the safety issue with public transportation. If you look at the top reason why people actually don't want to take the bus or why people don't want to take the subway, it's because people say their top reason is safety. People say, oh, it's unsafe. People say, oh, I don't feel safe taking the subway. That's another major driver for people just using Uber and Lyft, even if it's more expensive, just because a lot of people just won't get on the subway because they don't feel safe on the subway. So that's, and I could go on. There's more and more points here about where the world is headed. But if we don't own our mode of transportation, if we don't own our cars, and if someone wants exposure to that sector outside of Tesla stock, this is not financial advice. My exposure to Tesla stock, to that sector is Tesla stock and the self-driving robotaxi division. But let's assume you don't subscribe to the Tesla Cybercab view and future and let's assume, you find things like a Uber or a DoorDash to be overvalued or to be too mature of a company, then Grab does indeed look like the most compelling one in the framework. And it is objectively one of, if not the most compelling stock in that sector of transportation. Again, forward growth is predicted to be 33%. They have the second highest gross margin at 42%. They are the most profitable from an EBITDA margin standpoint, and they achieve a rule of 44. So a lot of good things to be said about Grab Holdings. This is not financial advice. I do not own the stock, but I understand why many of my viewers are interested in that stock. And thank you to the Patreon member for sponsoring this video. This was not financial advice, not investment advice. This is just entertainment. Please like, please subscribe, please follow me on Patreon, please follow me on X. Thank you for watching and have a wonderful day.